Welcome to Investors Insights. Our topic today is 2021 markets, Georgia on my mind. A lot of questions are taking place as we start this new year. In addition to that, we've already voiced that a decade of change has taken place in the year of 2020. And it opens up a lot of questions about what will we see in 2021. Several of our clients have already asked about technology and innovation. They've asked about globalization, the issues with China. Will Vietnam and Malaysia benefit from all the issues going on with China? The low interest rates is another one. Will we continue to see that? But today, I am joined by my distinguished colleagues who I had an early morning meeting with, Bobby Norman, Trey Booth, and Adam Van Zant. And we have had a great discussion to start this year off with. And Bobby, I'm going to ask you to start off because Georgia on my mind. Why on earth would we pick that as our topic?
Yeah, Greg. First, Happy New Year, everyone. Look, it's no secret that record low interest rates, monetary actions by the Federal Reserve, and then the stimulus passed by Congress last year helped drive a lot of the growth that we saw in the equity markets. And we think that story will continue into 2021. Look, one thing we're following carefully is the Senate runoff in Georgia tomorrow and the impact that result will have for the markets for this new year. And so as you can see in this chart, going back to 1950, the market has significantly outperformed with a divided Congress, with annual market returns averaging 17.2%. Also, what's interesting, and you can see there in the middle column, annual GDP is historically higher with a Democratic-controlled Congress. One reason for that is that there's more government spending, which drives GDP higher. But listen, so here's why tomorrow's election results in Georgia matter for the market. If the Democrats flip both seats, President-elect Biden will have more control of both chambers of Congress and could move to reverse the corporate tax cuts of 2017, which would immediately put company earnings and stock prices under pressure. However, and this is where it gets interesting here, this is where the trend of the more stimulus from Congress story could continue in the new year. The thought is a Democratic victory could boost the market by raising expectations for more aggressive fiscal stimulus on top of the already billions of dollars deployed already by Congress last year. So it's somewhat baked into the equity markets that there will be a divided Congress next year. So a Democratic sweep could disrupt the reason why the markets performed so well after the election last year in the thought of having a divided Congress. So it's hard to overstate here how important these elections are for the size, the scale, and really the speed of the 2021 fiscal tax and regulatory policy. It could immediately impact the markets in the new year.
And Bobby, I thought you gave a great summary on that. And let me say this, as we discussed in the meeting, I'm going into my 39th year of being in this industry. I've been through a lot of administrations. I've been through a lot of changes in Congress. The point we want to make is, whether you're Democrat, Republican, whatever your party views are, is that the markets react in different ways. And what you need to understand is, at Five Plan Partners in this 2021 year, regardless of how Georgia turns out, we're going to continue to manage our clients' money in relation to their financial blueprints to make sure that they're on track. And yes, it may cause volatility, disruption, depending on how the election goes. But as I like to say, this too shall pass, and we navigate through it. So we want you to understand what we may be facing in January and ways in which we can go through that. Also, Trey, you brought up some great themes about 2021 and asking the question, what will we see going forward?
Yeah, thanks for. Yeah, one of the major trends of 2020 is the technological advancements, whether it's on healthcare advancements, a vaccine, or online learning or online business. We've pulled forward what is potentially decades worth of innovation in 1 year. And so one of the big questions for the market and for individuals is, did we pull forward future growth and we now have to pay that price by having slower growth going forward? Or did we reset and have a new baseline that we will now build off of and be more productive going forward? One of the reasons this is so important is if you look at the price to earnings ratio of the S&P 500, it is currently 40% above the 20-year average. And that's because the price is held up, but earnings have been hurt. And so there's two ways to fix that elevated level. Either price can come down, which would hurt investors, or earnings can outperform. And how do earnings outperform? We get more productive, we get more efficient, and this technological advancement may create a more efficient corporate America that has higher profits. So the Georgia election will likely have an impact on that earnings as well through taxes, but a lot of questions. And you can ask yourself these questions to see if this innovation holds. Going into 2021, do you think you will do more online shopping, more delivery of food and goods and services than before? Or do you think you will do less and start going back into stores or start doing more in-person travels? In 2021, what will be interesting to see is that the vaccine, the quick advancement of vaccine to prevent COVID, is that a new baseline for vaccine development? Or did we spend all of our human capital and intellectual capital on developing one vaccine, and we're now way behind on development of other potential miracle drugs? So a lot of questions to be asked. It's the first quarter of 2021 is likely too soon to answer those questions. We'll have to see once things reopen, do people go back somewhat to their norms, eating in restaurants, traveling in person, or and working in offices in person, or do we see people build off the advancements we have now, and we see more online commuting, more online ordering, more efficient economy built around a just-in-time delivery system? So a lot of innovation up in the air. Typically you say that technology has never been this fast and it'll never be this slow again because technology is always advancing. But there's been a lot of human behavior change this year built around technology that has the potential of reverting that could either be good or bad. It's just about human nature. And so something for us to watch very closely going into 2021. Will the trend continue, or will we see a bit of a reversion to the mean? Two very conflicting concepts that will play out in 2021.
Well, and you're bringing up great points, Trey, from the standpoint that the COVID virus has been huge in terms of the impact it's made on us and our quality of life and the way we've changed habits. And it's going to continue to be a theme, but with the vaccine coming about, all these things that came out of 2020 as a result of what we had to do due to COVID, we are now going to see that continue moving forward and see how people adjust with the innovation and what new jobs, what new industries, how people live will come out of that. And will there be opportunities for us to invest in? It's great fundamental analysis that you've given there. And tied to that, I want to just say, Adam, we received a lot of compliments in 2020 as you talked about technical analysis, because in fundamental analysis, we're looking at the earnings. We're looking at the economy. We're looking at trends. From the standpoint of technical analysis, at one point here during the 2020 COVID year, there were no earnings. We had to navigate through the market based on watching the indices there of the markets, the S&P 500, the Dow, seeing the NASDAQ as it was moving up, as well as we saw it go down earlier in the year. So tell us where we are now as we enter 2021 on the technical analysis in terms of support, resistance, as it ties into what Trey just said.
Yeah, and I appreciate that, Greg. And like you said, there's certain indices that we follow. One that we like to follow in particular is the S&P 500. As you know, we did that through 2020. So the 31st close was 3,756. Now, this is significant because it's the end of the year close as well. This has now pushed a new resistance level up to 3,800, and now we have a new support level of 3,700. One thing going into 2021 we want to be really particular about looking at is moving day averages. So like Bobby said earlier, he stated that the election is coming up for the Senate for Georgia. And that's one thing we want to look at from a short-term standpoint of a 20-day moving average. We also want to look at an intermediate and long-term average of 100-day and 200-day moving averages. So that will give us a better indication of trends, as Trey mentioned earlier. And inside the S&P 500, there's 11 sectors. So these 11 sectors, we also want to keep an eye on as well. It's not just the S&P 500 as a broad term, but it's also the sectors that make up the S&P 500. And some of these can be affected, such as financials, technology, as we talked about earlier. So this is something that we want to look at and make sure that is the consumer going to continue to embrace this innovation, to embrace this technology in the year 2021.
Yeah, and so as we have the Georgia election, if we start to see the markets react negative to that, The support level of 3,700, we will be watching closely to see if the market holds up. If it breaks through that, then we'll be looking at other support levels. At some point, there'll be buying opportunities there. At the same time, if the markets react favorably, let's say Georgia does elect one Republican senator and the House remains majority Democrat, the Senate remains Republican majority, then from the standpoint, should we see markets start to move up or positive in that direction, we know that we've got to continue to have great earnings, great announcements. The vaccine has got to be distributed to keep this market moving up. So that gives you a lot of information that we're looking at as we start the first week of 2021. We will keep you updated through our social media, these types of communications. Please take time to listen to our past podcast or watch our vlogs so that you can understand how we connect the dots, how we're looking at the markets, how we're looking at your portfolio in relation to your financial blueprint. We thank you for being with us throughout the 2020 year, and we're looking forward to better days in 2021. Take care.